metal scams. Because, this is new to a lot of people. They are new to the precious metals market, and there are a lot of companies that are advertising. All over, you see these ads for gold companies. They're all over the radio. They're all over television. Unfortunately, the companies that are advertising are the ones that are really ripping everybody off. They can only afford the ads because of the outrageous markups that they charge on their products. And there's two, scams that are out there that really need to be avoided. One of them is the numismatic con, where the bullion sellers will try to convince their unsuspecting prospects that they need to buy a numismatic coin or some kind of antique coin because it's going to perform better than pure bullion, or because it's going to protect them from government confiscation. There's all kinds of lies that are being told to people to try to get them to buy these coins. But the reason that the gold salesmen want their customers to buy these coins is because they make 10 or 20 times the profit when you buy those coins. If somebody, puts $5,000 into gold bullion, the coin dealer might only charge $200, $300 commission, whereas if they put $5,000 into the rare coins, the commission might be $2,000 to $3,000 out of the $5,000. So the broker or the salesman has a powerful incentive to steer people into these products. And a lot of companies use a bait and switch approach where they'll advertise a very competitively priced bullion coin or bar, but when somebody calls up to buy that, they are hard sold into not buying that, but buying one of these rare or collectible coins. And in fact, many of these coins have very little numismatic value at all. I mean, there are some legitimate numismatic coins that collectors can buy if you want to be a coin collector. But if you want to be a bullion investor, you don't want to start up a coin collection. And if you're going to collect coins, you got to collect something that's really rare, not these phony coins that are being marketed as if they were rare and where people are paying these huge prices. I mean, some of these coins, people that have bought gold through some of these these big high-profile gold dealers, people have bought gold when gold was $800 an ounce, $700 an ounce. They still can't make any money. Even with gold at $13.50, when they go to sell their coins, they're still losing.
How do you feel, though, about numismatics that have been properly graded? PCGS 63, 64, 65.
See, if you're trying to buy gold, which most people are buying gold because they fear inflation, because they fear an economic collapse, you should buy gold bullion. If you want to buy something that's rare, that's a work of art, that's, you can buy a Rembrandt, that can go up in value. If times really get tough, that's when rarities get cheap, because what happens is the collectors need to unload them because they're broke. A lot of the coin collectors have a lot of money in the stock market. They have a lot of money in other assets. And if all of a sudden there's a crash and the economy is weak and they need money, sometimes, like some of the salesmen pushing these things will show charts of numismatic coins that show how they did, in the 1980s and 1990s. Yes, numismatic coins, real ones, did better than bullion because bullion was in a bear market. But since bullion has been in the bull market since 2000, bullion has done better than rare coins. And of course, when they show you the rare coins, they don't show you the types of coins that they're selling. They'll show you 10 or 20, rare coins that, in hindsight, they picked the ones that went up because, it's like saying the stock market is good, and then you just show people the stocks that went up, and you don't show them all the other stocks that went down. The coins that they're usually referring to are coins that are really rare, where there's only a few of them in the world, and they sell for like $100,000 a piece. Here's how this, Picasso is done, and then they sell you a poster.
If you want to invest in precious metals, bullion is your proxy. But if you want to invest in something that is a rarity, such as a Rembrandt, as you said, or a Monet or Picasso, then that is an entirely separate investment class, and you need to differentiate between the two.
Right, but the problem is these coin companies don't do that. They get people confused, and they think they're investing in bullion, and they're not. And the reason they do it is because of the huge commission. So, and I've talked to people on the phones who bought silver when it was $10, $12 an ounce, and here it is almost $3 an ounce, and they're just barely breaking even, if that, because of these transaction costs. And the other big scam that's out there is leverage, where companies will get you to leverage your metals, where they will loan you money to buy your coins, but they charge the commission on the full amount that you purchase, not based on the money that you send in. So the commission ends up being a huge amount of your initial investment, and then of course they charge a high rate of interest on the money they loaned you. So if you get a small correction in the price of gold or silver, you can quickly get a margin call and be wiped out. So I think it's you don't want to turn physical gold into a big leverage gamble, you want to take possession of it. You don't want to leave it at your bullion dealer, as collateral on your loan. If you really want to gamble with leverage, you can get a futures contract on the Merc. I mean, it's a lot cheaper. The commissions are next to nothing, and you got a better chance of making money.
Give folks a rule of thumb, Peter. Roughly 5-6% then markup over the spot price of bullion if you're going to make purchases out there.
Yeah, I would say that reputable dealers would charge no more than 5. Obviously, if the coin is smaller than that, if you're buying like a 10th ounce gold coin, you're probably going to pay more. But for like a typical 1 ounce Canadian maple leaf or coin like that, I think 5 to 6% over the spot value would be a pretty fair price to pay, which would include the markup that the dealer was charging for his commission, which is about what we do at Euro Pacific Precious Metals for those coins. And, of course, we buy them back at about the spot price. So really what needs to happen is if you buy these gold coins, you need bullion prices to rise about 6% for you to be able to break even as far as to be able to sell the coin back and get your money back. Now, there might be some shipping costs or other things, but that's reasonable for physical bullion coins. A lot of times you need 70, 80, 90, 100% appreciation to just break even, let alone try to make a profit. They don't think they're making an investment. So people are calling up these bullion companies as if they're trying to make an investment, but the bullion companies think they're shopping at Neiman Marcus. They create the false impression are in financial advisors and that they're giving them investment advice. They're not. They're trying to unload their highly marked up inventory.
Tell folks when they can expect this report to be released by Euro Pacific Capital.
I know it's coming out on the website on europacmetals.com. And my last 2 commentaries on my newsletter, which is free that you can subscribe to on europacmetals.com, I have one article specifically dealing with the leverage con, and I have another article specifically dealing with the numismatic confiscation con.
All right, sir. I want to thank you for your time today.
Sure. Thanks for having me.